All right. Good afternoon, Checkmate crew. Today is Thursday, July 21st, 2022. It is just noon here in New York City. Let's get down to business. Okay, so today, earlier in the morning, we had the ECB rate meeting, European Central Bank. They have decided to raise rates by 50 basis points. I believe the consensus was 25 basis points, but they've raised it a little bit quicker. Lagarde made an announcement saying that we may be in a period of higher inflation in the Eurozone and that it may stick for a while, which sounds kind of hawkish. You know, Lagarde was viewed as a dove, but finally I think she is now listening to the tunes of other central banks and has now started getting more hawkish. Okay, she was one of the few central bankers who remained dovish. Of course, Japan, the Bank of Japan, is still dovish to this day. I think they're the only central bank now, them and China. So now Lagarde and the Eurozone ECB is getting hawkish. They are raising rates. One of the big worries that they have is that not all Eurozone members have the same finances. You know, Germany's finances are very different than Italy's. Okay, Italy has a lot of debt and is not as productive as Germany. Germany, is very export. It's very export dependent, and so it poses a very unique problem in the Eurozone. So we shall see what happens. We are getting a little bit of a response in currencies. Dollar has been extremely volatile. So let's just start with that. Let's start with the most important things, guys. Big picture first, okay? Big picture, and then we start zooming in, all right? Big picture. The dollar. This blue line is today's, this dotted blue line is today's 18-day moving average. One of our members saw that the dollar index was a little bit different on his brokerage system than what I use. What I use is the ICE dollar index. I use this, and I also use the dollar index futures, which is tradable. Okay, so I use both. But when I use but for the levels that I'm looking at for you guys, I'm showing you the dollar index just because usually the ICE dollar index is something that most brokerages show. So these, and the levels are actually very, very similar to the futures level. So that's why I'm giving you this, guys, because this is easier, way easier to view. Now, I believe one of our members, what he was looking at was the New York Board of Trade dollar index, which is a little bit different. So your moving averages may be a little bit different. And the quoted price may be a little bit different. So always keep that in mind. But when it comes to the most internationally recognized dollar index, it's this one. It's the one from the ICE, the Intercontinental Exchange. Okay, so keep that in mind, guys. Okay, so anyway, we are seeing the dollar actually dropped a little bit below that and then just rebounded very quickly. One of the indicators, one of the more minor indicators I was telling you guys about was ZF, which is the 5-year Treasury bond, and as you can see, it's the 5-year Treasury bond futures. Okay, so again, remember when bond prices go up, yields come down. Okay, so today bond prices, that's what the futures track, bond prices are up. So today yields are down. Okay, the more up bond prices go, the further down yields go. Okay, so ZF right now has an increase, but it's nothing compared to ZB, which is a 30-year bond. The 30-year bond is actually rallying more than the 5-year bond. So what does that mean? That means the further dated rates are dropping faster than the closer dated ones. Okay, that may be where we're seeing the dollar demand. Whenever short-term rates are rising or they're stronger than the longer-term rates, generally that creates a favorable situation for keeping dollars as a carry trade. Usually when you see the yield curve steepen, that's usually when that's usually when the demand for that carry trade in the dollar goes down. If you don't know what that is, don't worry about it, okay? But basically, if you are a dollar long, if you're a dollar bull, you want to see ZF underperforming ZB, okay? So that is just a little free tip for you guys. Okay, let's and then front and center, Euro USD. Euro, actually what I want to show is, let me show you this chart right here. This is the one that has my Bollinger Bands and the 18-day moving average. I find it quite peculiar that the Euro USD spot market is like almost the exact inverse of the dollar. I mean, that is to be expected, of course, but it's also like the way the 18-day moving average also behaves on spot Euro USD is kind of interesting. It's like the mirror of the dollar. Literally, like today, it poked above its 18-day moving average and then went below. So I don't know what that means, but I just find that very, very peculiar that it's almost like a mirror image of each other. So that's interesting. That's very interesting to me. So I guess if you're a breakout trader, I mean, I personally will not do this, but if you're a breakout trader and you notice that the euro, it closes above this 18-day moving average, maybe perhaps that's a breakout signal and you can play it until the 2 standard deviation Bollinger Band. That might be a good trade. Just anticipating. I don't know if it's actually going to do that or not. I'm not positioned for that, but just in case if one wanted to, look at some trades in the currency markets, I think that would be interesting. Okay. Oh, wow. Look at that. VIX is coming down and the markets are coming back up. Still, it appears as if the Dow Jones Industrial Average is still our weakest index. Let's just go through all their indexes right now. S&P 500 index is up 0.47%. The NASDAQ is up 0.9%, but Dow Jones is down 0.12%. Okay, and again, data wins. All right, so this is the reason why I track all those ratio charts and all those indicators that we have. IVW, IVE. This is growth versus value. Remember, for past few weeks, I've been saying it's on an uptrend. If you're going to go long on tech. Didn't I say that? I said that many, many times. So here you go. This is the reason why. All right. It's important to look at these data points here. All right. So that's what we're seeing in there. Oh, I'm actually curious. What is small caps doing? Small caps is down. Interesting. Small caps, liquidity sensitivity. What is going on with junk bonds? Is that why? Junk bonds, a little bit of a muted response. No, it's rallying actually. That's interesting. Yesterday, we had a huge advance over decline in our junk bonds advanced decline line, which also is quite bullish actually. And again, we're waiting on that confirmation. All right, we're waiting on that confirmation. We have a higher high. If it comes down on the next pullback, if it makes a higher low and then gets back up again, I think that would mean the bottom is in for this season. Okay. Until then, I'm going to remain neutral. All right, neutral. I'm still 92, 93% cash. Okay. And yes, the 7 or 8%, it's all like risk off sentiment trades. Again, I have a core portfolio of mostly SPY shares, SPY, Apple, and Chevron. So it's I mean, it is a speculative trade, but it's also a hedge as well. So it's kind of being used as both. Okay. So, always, I always tell you guys, the purpose of all of this, these videos, these calls is not for me to feed you fish or feed you these, trade calls. Is to teach you how to fish so that you can manage your own portfolio based on your own risk tolerance and, your own position inventory. Okay. So, dollar's bouncing back. Okay. So, we shall see. Again, it's all about closing prices. I do make comments throughout the day of what, the markets are doing. And, that's just, for you guys so that, to alert you guys to just keep a watch on things. But really, when it comes to trade decisions, you really want to wait for those end of day prices. It's the closing prices. It's when the institutions get involved. Those closing prices, it's like poker. It's like when you play poker, it's not until the very end where everybody shows their hand. That's kind of like what the end of the day is. The end of the day price shows you the hand of all the players, okay, especially the institutions, all right? So that's why I always wait for closing prices, okay? And so again, from yesterday's video and previous videos of my plan, of my trade plan and risk management plan, I'm just gonna get out of all risk off sentiment options plays if the dollar gets below, it closes below the 18-day moving average, okay? I am getting out of the China and EEM puts if the Australian dollar closes over 0.6903. That still hasn't changed. I will not change that, okay? That will not change. But until then, it's just all noise, okay? It's all noise until then, all right? So let's go through some of the other markets that we're tracking. We do have a plan to buy TSM. I told you guys about this. We're waiting up. Let me go to the other chart. Actually, I got a couple of DMs from a few of you about TSM. There was a member yesterday who went over, I believe, the DeMark sequence counter, and they said it was a DeMark 9 signal sell signal right here, but it went up. So I got a lot of questions like, oh, is DeMark, is it a good indicator? Should I stop using it? I got all this. Guys, even the person that suggested the use of the indicator of the DeMark indicator, even they said that it is just one indicator that they use, okay? So don't get too fixated just on one data point, okay? Even the person that's using it is saying that, they're only using it as part of a bigger, a list of indicators that they use, okay? So guys, don't get fixated on just one data point, okay? Always remember that. And there's nothing that's 100%. There's no holy grail in trading, okay? So no matter how good something is, sometimes it's not gonna work, and that's life, that's trading. There's a lot of random variables when it comes to financial markets, okay? So just keep that in mind, guys, all right? Don't be too quick to blame people and stuff, it happens, okay? It happens. It's one indicator. It's just one indicator, all right? So, what we're waiting for, though, what I'm waiting for is to touch this 2 standard deviation Bollinger Band. Okay, right now it's at 89.24. I have my alert at 88. I'm going to start monitoring it very closely once it gets over 88. I really wanted to touch that 89 2 standard deviation Bollinger Band. Why is that? I went over to the Bollinger Band usage that the pros do. It's just an insider tip from me. As an insider myself a long time ago, I kept in touch with a lot of institutional traders, and they use this 2 standard deviation Bollinger Band. Again, if you want to see the settings of what they use, go back to those videos on Bollinger Bands. I think if you go on Twitch, it's actually on the education section. I have a separate video just on Bollinger Bands. It's just that snippet from that video. But basically, it's this 2 standard deviation Bollinger Band. I use length 18 for that. Why do the pros, that's what the pros use. Why do the pros use 18? I have no idea. The standard is actually 20. And for the 1 standard deviation Bollinger Band, they do use 20, okay? But anyway, we were seeing lots of block trade buying in a lot of Asian stocks, particularly in Chinese stocks and Taiwanese and other stocks like that, especially in tech. For the past few weeks, Alibaba, Tencent, Baidu was a big one. We made a lot of money on Baidu. That Baidu trade helped me pay for my Dow Jones Industrial Average and my Eurozone puts. All those 2 positions are fully paid for by the Baidu trade. So that was great. We saw that that institutional buying level come back into Baidu, and we were able to take advantage of that. But basically, with this Bollinger Bands, what I expect is that a lot of these traders who bought these stocks may start taking some profit at the 2 standard deviation Bollinger Band, because that's how they use it. They use the pros, a lot of institutional desks, especially in equities. they use the 2 standard deviation Bollinger Band as take profit areas. As you can see here, see there, it hits the 2 standard deviation Bollinger Band, boop, it gets pushed down, okay? So that's just a common theme that we see in stocks. See that? It touches it and pulls back, touches it, pulls back. So I think, it'll touch it and pull back. Right when it gets here, again, what I suggested was the 85.75 October spread. And, hopefully by that point, it will be about $2.50 each, giving us a 3-to-1 reward to risk ratio. As we get closer to that, I'll go more deep into which spread I'm using, but that's the expectation right now. That's what I'm using, and that's the same one that I called out in yesterday's Say What video. Okay, so if you guys want to take a look at how I built that spread, you can always go back to yesterday's video, Say What video. That's on our wiretap tapes. Also, I have it on Twitch and YouTube as well, so you can go over that as well. But what we're looking for is a break under that 80. Once we get into puts, once it gets to 80, what I told you guys was there was a lot of short puts at 80. Okay, lots of short puts here at 80, and so and they're very closely dated. And so if we get to a point where it actually goes below 80. All right, and the gamma just explodes and it makes delta explode to the point where those people who are short those puts needs to cover. And when short puts need to cover, they're going to be buying those puts. And what did I tell you guys about buying puts? If market participants are buying puts, it means the market maker is selling puts. Selling puts is a bullish position, so therefore they must short the underlying to remain delta neutral. Okay, so we may even see a little capitulation and even further downside once we lose that 80. Okay, the reward to risk is very compelling at that 89 zone. Okay, if it starts closing 2 days above the standard, 2 or 3 days above the 2 standard deviation Bollinger Band, we get out at a minimal loss. Okay, so that's the whole point. It's about risk management. I want to get in, and if I'm wrong, I want the smallest drawdown possible, and that zone is 89. Okay. Here, I mean, I guess yesterday, if you were super aggressive, you could have done it. But the reward to risk is more compelling at 89. So that's what we're waiting on. Okay, still the same plan. Oil. Oh my goodness. One of our members said, I remember it was through private DMs. One of the members and we talked about shorting oil around here at 100. I didn't end up doing it. Man, that would have been a nice trade. Oh well, we're still waiting on that 118, 120. I think we actually there was actually a crazy development in oil. The Saudi prince MBS, Mohammed bin Salman, he it seemed like it was a slip. Okay, he slipped and said that the max capacity of the kingdom's oil company was, their max capacity was where they were pumping right now, like around that 13 million per day. Before then it was very unknown what the max capacity was, but he let it slip. Now, whether that was done on purpose or not, everybody's saying that it was an accident. I don't quite know if that's an accident. I think that's a perfect excuse. And actually, right after he said that, the oil markets jumped. Okay? Right after he said that. It was lower. And then after he made that statement, the oil started rising again. So I think that's a perfect excuse to send this oil back up to 118 or so. Actually, the 2 standard deviation Bollinger Bands at 112. But, I mean, by that point, it could curl up. And so, again, I'm waiting for that 118, 120 zone. That's really where I want to place most of my short bets. I'm willing to scale in on some puts, though, at 111, 112, though. I am willing to do that, but very small, super, 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 super duper small. Okay? My main is going to be that 118 to 120. All I'm doing is on 112, 111, 112 zone. If I scale into puts, it's just to alleviate my FOMO. Okay, it's really just to alleviate my FOMO. So I'm just gonna buy like maybe a couple spreads right here. But my main buying of puts is gonna happen here, 118 to 120. I think we may get there. We have a decent chance. Decent chance. Not sure. Okay, not sure. All right. What else is going on? AUD, USD, Australian dollar. Oh my goodness. It's staying under that 6903. That's our level. If it closes above that, I think that's very bullish for Chinese stocks. Okay, it's Chinese stocks and metals. It's gonna be super bullish on Chinese stocks and metals if we close over that. I mean, it's like literally flirting with that line right now. We shall see. We shall see. So this is what's causing. Let's just look at the Hang Seng index. Yeah, this is what's causing a little bit of weakness in Chinese stocks. We shall see. Again, I don't know what's going to happen. It opened higher and it's actually coming down. This is the daily chart. The daily chart is not that good for FXI. Again, guys, when our market here in the United States is open, it's their overnight market. Okay, the weekly chart generally, kind of smooths the chart out a little bit. And as you can see here, it's about to lose its 18-week moving average. I mean, it did lose it, and then it kind of gapped up. And if it fails there, I can definitely see it going to its 2 standard deviation Bollinger Band on the weekly chart, which would be at around $29. Okay, that would make it around the lows from earlier this year. Not sure if we get there though. I'm not sure if we get there. Yeah, I'm not sure if we get there. Oh, that's very interesting. Look at that. I didn't notice this before, but FXI literally lost its COVID lows, came back to retest it, lost it, came back to retest it, and lost it again. Interesting. I never noticed that before. Huh. Maybe it's forming a box between COVID lows and new lows. Possibly. Okay? We shall see. Again, we'll see. Metals. Since we're talking about Australian dollar, let's talk about metals for a second. Gold. Okay? Gold touched its weekly support line. Right here, there's a weekly support right here. Every time we had large pullbacks since 2020 on gold, this is the level that it has held. Okay? 2021, it held here, right at that spot. It was like around that 1680 on the gold futures. It did the same thing here back in July of 2021. All right, and it touched it overnight in overnight markets. All right, you know how I feel about gold. I think gold will have a new bull market cycle. I kind of feel like an asshole saying that right now because of the gold trade that I did, and we were stopped out at minus 20%. But I still believe that gold will rise, maybe towards the end of the year, maybe 2023 when the dollar starts easing back. Gold right now is trading like a currency. It doesn't always do that. It's not always a dollar inverse. It's more accurate to call it a hedge on currency volatility. Okay, I think that's a more accurate statement on gold's behavior than calling it inverse dollar. But for now, though, it is kind of acting like inverse dollar. It is kind of acting like a currency. All right. I believe we revisit that 1680 at some point. I think it's going to go up, bounce, come down, retouch it, retest it, and then start a bigger bull move. Okay. So if that happens, I'm going to set alerts. Okay. I'm going to set some alerts now at 1690. Okay, so at 1690, I'm going to get alerted, and then I'm just going to watch that thing like a hawk. And then I'm going to buy some spreads that are 6 months out, call debit spread, so that's a bullish spread, once it hits that 1680 or so. And then I'm going to take profits at the upper 2 standard deviation Bollinger Band. That's where I'm going to take profits. So that's a big move. That is a big move. And I'm going to be looking for at least 4-to-1, 5-to-1 reward to risk on my call debit spreads. And once we get closer to that, again, I'm going to show you how to build that spread, just like I did with all the previous spreads. Actually, let's look at it right now. Screw it. Most of you guys are probably not going to be using gold futures options. I don't know how many of you have futures enabled portfolios, but the vast majority of you are probably going to use GLD. which is the gold ETF. All right, it's the largest physical gold holding ETF. Okay. So, it's 6 months from now. It's January. I mean, let's take a look here. Where are those levels? GLD would be would be about 190, 187, 190. So if we were to build a 170, 190 right now, and the reason why I'm putting so much distance is I want to take advantage of as much skew as possible. The difference between implied volatilities closer at the money versus out the money. Okay, so the higher we go, the higher the implied volatility is. There is a little bit of a skew, a smile, so to speak, on GLD. If you want to take a look at the skew chart right here, that's the skew. So yeah, you can see there's a little bit of forward skew on the higher strikes. You see that? There's a little bit of a forward skew. Okay, meaning the higher in the price is higher than what's right now. So right now it's at 160. All the strikes that are higher than 160 are having increased implied volatilities, meaning more premium in there, more expectation for bigger movement. So obviously we want to sell the higher IV strikes and buy the lower IV strikes. So if we buy the 170, 190 and really take advantage of as much of the skew as possible, let's just take a look at some verticals right here. Some verticals, 170, 190 gives us a 323. Okay, 323 is not bad. 323 gives us, what is that, 6 to 1? Is that 6 to 1? No, that's 5 to 1. 5 to 1 reward to risk. It gives us 5 to 1 reward to risk. All up until 333. $3.33. Up until $3.33, we can get 5 to 1 right now. If one were inclined to go long right now, if I were inclined to go long right now, that's the spread that I would use. The January 2023 170, 190. I am not, however, inclined to go long right now. I am not inclined to go long right now because I know metals, they don't do V moves. Metals rarely do V moves. See here, look, it revisited. Look at that. Look at what happened here. 1, 2, 3 weeks. In 3 weeks, he revisited that spot. Okay? In 3 weeks, it revisited that spot. Let me see if it revisited. Here, also, too, look at this. Look at this right here. It visited that area, and what did it do? 1, 2, 3, 4, 5, 6, 7 weeks later, it revisited that low again. Gold rarely does V moves. It's not like stocks and things like that. Those stocks, those are, they do V moves because of the options, the positioning and all the dynamic options hedging and put buying and cashing out of puts and things like that. That's why you see a lot of V moves and equities, although going forward, I think we're going to see less of that. But you don't see that in metals often. Usually when we visit those kinds of lows, we usually come back to it in a few weeks. All right, so that's what I'm waiting for. So I don't want to pay that time value if we have to come back. Okay, I don't want to have to pay for that time. So I'm going to wait and be very patient. I'm going to wait a couple more weeks. I think we see those bottoms again. That's when I'll go long, and boom, there we go. Okay, there we go. Hopefully that's when the dollar will start coming down too. All right, so we shall see. Oh, VIX is coming down. Market's going up. What's going on? Is the dollar safe? Ooh. Okay, well, it's all right for now. We'll have to watch that. Again, closing prices, guys, closing prices. Okay, so that's metals. Other metals that I want to be looking at, copper. Let's take a look at copper, all right? HG. Oops. HG, there we go. All right. So that copper, okay. It's not really doing much. It's starting to flatten out. Let's take a look at our risk on, risk off sentiment in the metals market. Okay, this is gold to copper ratio. This is the kind of the commodities traders risk on, risk off sentiment. Usually when we see this chart going up, there's generally a risk off sentiment in the markets. When it's coming down, that's risk on, all right? Because when it's going up, it means the store of value metal, which is gold, is outperforming copper. When it's coming down, it means copper, which is an industrial metal, is outperforming a store of value. Okay, so I mean, we're seeing it pause a little bit, but you know, generally in this chart too, we see sometimes it pauses, and it may pause for like, you know, it can pause for like a few months or even up to a year, or you know, a few quarters, and then come back up. So maybe that's what we're seeing, just a little consolidation and coming back. We could. All right, and maybe it consolidates a little bit less time. Maybe it just goes here. But generally what we see is when this goes up, gold usually goes up too. That's why I did that gold trade right here. All right, but then we got stopped out. I'm still willing to get back into it if we see those 1680 lows revisited within the next couple of weeks. All right, so that is my game plan when it comes to gold. Okay, let's look at the broad market. Since we're talking about gold, we might as well talk about Bitcoin versus gold. Okay, what a disappointment. I mean, damn. We were talking about getting long potentially around here. Remember when I said, oh, it made a higher high, it's making a higher low? I was like, ooh, if one were to aggressive, you could start scaling in long. That would have been a good trade. I think Bitcoin is up like 15, 20% since then. That would have been an awesome trade. It is what it is, though. I will remain patient, and I'll try to buy here. I will remain patient. Okay. Actually, if gold goes up, if gold starts outperforming Bitcoin and things like that, let's say gold gets to like 1900, 2000, the 6 multiplier would actually put that about 12,000 on Bitcoin. That's still a ways off. Later on, you know, in a few minutes, I'm going to go over the options positioning on Bitcoin. So maybe we'll take a look and see if we can get some insights out of that. Okay. TIPTLT, inflation protected treasury ETF versus long-term bonds ETF. It is still within that shopping range. It's just shopping back and forth. I think they're going to try to get their cue from this Fed meeting that we have next week. Okay, next Wednesday, rate hike Wednesday. Okay, so we'll see what happens. Okay, but it's still just within that chop trading range. Let's see, US 30 versus 10, still in a mini downtrend. Made an update today. Let's just see what 10 and 2 are doing. If I had to guess, I would say this is coming down. Is it? No, it is going a little bit up, but it's not that big of a movement. I think this is the reason why Dow is underperforming. The bank stocks just can't catch a break. Well, they can't rally as much if this is still negative. Now, generally, if we see this coming back up and it gets uninverted, we see a relief rally usually in bank stocks that has legs. You know, that rally can last for weeks in bank stocks. That would probably that would send all markets up. Then you would have breadth increasing. Okay. Not only then are just growth stocks participating, value stocks are also participating, banks are participating. That would be super bullish for equity markets. Okay. As far as the high-low line, this is something that we're also tracking as well. High-low line is starting to flatten. It is starting to flatten. Okay, as you can see, ooh, it's teetering on the edge of becoming neutral and starting to become advances. All right, this is the New York Stock Exchange high-low line. How many highs versus how many lows? If it's positive, it means stocks are making new highs compared to new lows. So we shall see. Okay, we shall see. Very interesting. Oh, and one thing I've noticed too is that, you know how, you know, in the past couple of weeks we've seen block trades in tech stocks on the buy side. I'm starting to notice block trades on the sell side for pharmaceutical stocks and you know, the recession obsession stocks, consumer staples, things like that. They're actually starting to get a lot of asks in the market. There's a lot of institutional block trade sells now this week on those names. That's very interesting. That means there's a little bit of rotation going on. And you know what? Guess what? We called that. Okay, we saw this coming, guys, right? It shouldn't be a surprise to us, right? We saw that. We saw that coming. I told you guys this. IVW, IVE. This was the tell. Okay, these ratio charts are working really well. All right. So keep an eye on that. Okay. Since we're talking about our positions, here we go. EEM. I think there's a little bit of a relief rally in some of the European holdings of EEM. Eurozone stocks, ended at the high today. But if you actually look at the dollar in comparison to EM currencies, the dollar is advancing. Oh, well, it was before the video. It was. Okay, so some of them have flipped. Some of them have flipped. Well, we'll see. We shall see what happens then. Okay. Again, it's about closing prices, guys. Closing prices. But in the morning, at least, I saw that EM currencies were falling against the dollar. So that's not a good sign for EEM. We will see what happens. Oh, it's coming back up. Dollar's coming back up. Okay, so we shall see. All right, we shall see. Eurozone stocks. I still have my FEZ. It is what it is. That was poorly timed. But I'm still holding on to it. One thing, okay, this is something we discussed earlier today. Just a little bit of an outlook on U.S. equities. Okay, remember, guys, for the last few weeks, I've been telling you guys that the VIX and the markets have not been as closely correlated as what we've been used to for the last 10 years. Okay, we've seen moments where the VIX is going up and the markets are going up as well too. We also mostly though what we saw was the markets coming down and VIX coming down with it. That's what we saw. Markets are coming down and VIX is coming down with it. Well, what does that mean? That means it's a dash for cash. Okay, that's why the dollar has been going up so much, because people are selling stocks and buying dollars. Okay, remember, TINA is over. There is no alternative. That kind of mindset is over. Okay, with the dollar on an uptrend, there is an alternative. Dollars are the alternative. With the treasury rate being a 10-year treasury rate being 3% or higher, that's an alternative. Okay, so stocks now do have an alternative. We are not in the same paradigm as where we were for the last 10 years, from 2008 till basically end of 2021. We are no longer in that paradigm. Okay, there is an alternative. All right, and so what we're seeing is actual stocks getting sold, okay? And so hedging demand going down too. So that's why we're seeing the VIX and the market coming down at the same time. Now, here's the thing. Let's anticipate, okay? We're seeing now more and more accumulation in stocks. We've been seeing this now for the past few weeks. More and more of that cash is getting utilized in the stock market, okay? So now if we see a risk event, we might see an outsized move up in VIX. That's what I'm hoping for. Okay, I'm hoping that the next VIX spike is going to be a little bit higher than, bigger than what the drop would imply in the equity markets. Okay, so I'm looking for an outsized move up on the VIX on our next VIX spike. All right, and what that would prove to me through options positioning and through the data that I have is that we may see this rolling bull market in 2023. Rolling bull market just like 2017. Okay, in 2017 we had this rolling bull market. Let me show you guys, okay? Boom, boom. Oh, whoa. In 2017, where are you, 2017? Right here, 2017. We had this rolling bull market in 2017, okay? If we see that outsized VIX spike up and we see the VIX collapse right afterwards, that would signal us that there is a rolling bull market. That means there's going to be accumulation sector by sector. Okay, sector by sector accumulation in the stock market, and that's what happened in 2017. We had sector by sector. You know, one sector would do very, very well. One sector would pause, not necessarily correct, but pause. And so what we saw was these like very stable upward market, which is this is the perfect environment for day traders, especially in the summer months. Right after that summer, from here till around January or so, that was like, oh my goodness. I mean, the money that we could make from day trading this. Again, what I did was I used SPY. I bought in the morning, closed 2 hours later, wait an hour or two, bought again, closed at the end of day or the next day. That was just like money printing machine right here. Okay, and I think we might get that in 2023. So again, I'm not trying to predict the future. I'm just anticipating what could be 5 or 6 moves ahead. So this is still like many months away. This is still at least like 3 or 4, maybe 2 or 3 if it's going to be quick. You know, maybe 2 or 3 months away still. I still think we see one more leg down though. I still think we have one more VIX spike. And that one's going to be like, I think it's going to be the big one. And it doesn't necessarily mean equities will fall big because of that. I think it will be like a muted kind of like a not so deep sell off in equities, but just a huge spike in VIX and SPY premiums. Okay, that's what I think is going to happen in the next round of volatility. All right, and if that happens, we're going to look for 2017 style markets, and then we're going to pivot into day trading strategies. We're going to start with checkmate trading. Yes, you heard it right. You heard Mickey Blindside correctly. Yes, there is a time and place for day trading. Yes, I'm not a huge fan of it. You know, and that's mainly because of market conditions. I'm not a huge fan of it unless the edge is on our side, okay? I'm a fan of whatever I have an edge on. And we did not have that kind of day trading edge for the past year, a year and a half. But now I see it coming. 2017, I think we're going to have a day trading style year, okay? So stay tuned. We will go over those strategies. We will pivot if we need to, okay? So we shall see, all right? We'll see. Okay, so what else are we looking at, guys? So what did we look at? We looked at everything. Did we look at everything stock related? Yes, we did. Okay, let's get to cryptos, okay? Cryptos. Oh my God. Exciting, exciting, exciting. Remember yesterday I told you guys that we're starting to see, I think Ethereum really, I mean, look at that. Wow, 5.4. Remember yesterday it was 5.2 and in the morning it was $4.9 billion. There's like $200 million more dollars that went into open interest on Ethereum. All right. It's still, so in the past 3 days, Bitcoin's notional value of open interest only went up by 100 million. We're starting to see a lot more participation in ETH. Hey, at this rate, in like a couple of days, the ETH options market might be bigger than Bitcoin's. That's crazy. That is crazy. Okay. Anyway. That's kind of exciting. Anyway, block trades, we're seeing calls. It's all about calls right now in Bitcoin market. Animal spirits reign right now. And look at this. Just like institutions, they're building positions now in December. Okay, look at that. Look at this overwhelming volume in calls for December. This is how institutions play. They look 6 to 9 months out. Okay, at the minimum, when they hedge, when they build options positions, they're looking 6 to 9 months. Only retail degens do like, you know, 0 DTE and weeklies. Okay, but the pros, the real pros, the big money, okay, the big boys, they look a little bit more out because they're all about risk management. Okay. That's crazy. Oh, look at that. The December OPEX now is exceeding September. Okay, hold on now. Hold on. I have to take a look at something now. Hold on. I have to take a look at this. S&P 500, let's just take a look at December OPEX real quick. What is going on? what is going on? That's very interesting. Very interesting. I'm gonna take a photo of this. Take a screenshot. Take a screenshot of that. Sorry guys, I just noticed. Wow, there's so much December buildup now. It's looking like it's not, or for December. So it was September. Even as of yesterday, even as of this morning, it was September. I don't know what happened. People are getting crazy for December. So end of year now. There's end of year demand. I just want to take a look and see if that's the same for SPX. If it mirrors what SPX is doing, my God, that can't be a coincidence. Yes, it is. Look at that. Look at that call volume for December. Strike. What is that? What is that? 4,500 out the money calls. And there's net call buying today on S&P 500. Net call buying today. 4,500 calls. Oh my goodness. Okay. It's really mirroring SPX now. Ethereum is mirroring the S&P 500. Isn't that the craziest thing? To me, that's amazing. Crypto's here to stay. I think, yeah, I mean, anybody who says crypto is going to zero, their portfolios are going to go to zero, okay? It's here to stay. I'm not saying shit coins and NFTs. No, those, that's fringe. That's still fringe. That's still fringe. But, you know, but I think ETH and Bitcoin definitely here to stay. And we're seeing that kind of like institutional type behavior. It's matching. It's matching, okay? Let's take a look at that December one. I mean, yeah, look at all this like positioning. We're positioned. Look at that. Look at all these huge OIs for out the money calls. Okay, so there's a call building coming up for December, but there's also hedging happening in December. Actually, a lot of the hedging on the put side is actually in September on the options chain. It's actually in September. So this is the September SPX. I just took a photo of this right before we started the video. As you can see, huge OI, huge. September options expirations for S&P 500 is a monster options expiration. It's the biggest options expiration in SPX history. September, it will be, okay? So we're starting to see that, you know, we're still seeing that here. Actually, let's just go and take a look at the Ethereum options chain for September. My goodness, guys, this is exciting stuff. We're literally watching history unfold here. We're watching history getting made, okay? This is crazy. This is crazy. 3,000. Look at that. That is crazy volume today. Crazy. Even more. 3,000, 4,000. There's definitely some animal spirits today. Animal spirits, all on the buy side. Mostly on the buy side. Okay. Wow. That is very interesting. Very interesting. Actually, I want to just make sure. Yeah, it's a lot of buying. It's a lot of buying. Lots of premiums getting bought. Yeah. Lots of premium getting bought. Let me just take a look at skew, guys. This market changes so quickly. Like even like what I saw like a couple of hours ago is like changing. Yeah, forward skew. Look at that. Forward skew forward. That's for tomorrow. What about for September, where the action is? See, this is more of a symmetric smile. This is more of that smile skew. That's more symmetric. September, look at that. Look at that. Forward skew. Look at that. There's forward skew now. So people are bidding up these calls. Okay, people are bidding up these calls. They're buying calls. People are buying calls for September and ETH. Okay, September. All right. Monster OI right now. Monster OI building for December as well. You know what's actually funny too is on the put side, we also have some fairly decent demand on the 1600s and 1500s. I don't think those are puts getting sold. I actually think that's or it could be actually. You know what? I have to research the order flow for that. I actually have to research the order flow. But if these are net puts sold, that's a spread called a risk reversal spread. Basically, they're selling puts and using that premium to buy calls because they're super bullish. That's a super bullish position. Generally, though, more often than not, though, institutions don't really take that big of an extreme like risk reversal bet. It does take a lot of capital, so when you do see it, it is institutions, but more often than not, generally they're hedging and buying calls at the same time. So if I were a gambling man, I would say that these were puts bought. But again, I have to just go through the order flow list. Deribit does not make it easy to go through. This is a very time consuming to go through, but I'll try to go through it and see if I can find what these orders are, if these are buys or sells. But just from initial look over, though, it does appear as if they're buys. So maybe this is hedging. And again, we have a lot of September hedging on SPX. So I think it mirrors that a lot. We're seeing that, and then a lot of risk taking and calls being bought for the end of the year. And also, again, we're seeing lots of OI on the call side. Oh, even volume too. We actually have good volume on those calls. Remember today, one of the higher strike volumes was the SPX 4,500 calls for December. Okay, 4,500 calls. Actually, you know what? I gotta go back to that. Hold on. I'm curious now. Oh my God, I'm curious. Hold on, guys. I'm like a kid in a candy store right now. Hold on, that 4,500 call. Hold on, what delta is that? If the delta of that and the 3,000 match, I mean, what a coincidence that would be. That's not a coincidence anymore. 4,500 delta 18. So I mean, the market shifted today. So anywhere between 15 and 18, probably 15 and 18. 15 and 18, 15 and 18, 15 and 18, 15 and 18, 15, hold on, 15 and 18, 15, 18. Where the fuck is that? Oh yeah, here. 15, 18, no. 15, 18, 15, 18, 15, 18. Is that the only call being bought right now? Was that the only strike? 15, 18, 15, 18, 15, 18, 15, 18. 24. Okay. That would have been too much. Well, actually, look at that. 3,500 is at 18. Delta 18. And that's one of our major strengths. They were accumulating the 3,500s a couple days ago. Ooh, that is kind of amazing. It would have been more amazing though if the higher volume was over there. But actually, if you look at the OI, it's our second biggest OI on the call side. It's a Delta 18. Okay. Very interesting. Very interesting indeed. Let's actually look at are there any lower strike ones that we had? We had some good volume on this one too. That one is Delta 42, Delta 24 would have been around there. Okay, so yeah, so 4,400 or so. Okay, so yeah, I mean we're seeing. I mean it is. I mean still, that's a pretty strong coincidence, don't you think? 3,500 Delta 18 on those 4,500 calls for the SPX 4,500 calls. So we're seeing mirroring. We're seeing mirroring of Ethereum and SPX. That's very interesting. Okay, so Ethereum, it looks like there's a lot of institutional demand. It looks like it's institutional demand, just like in SPX. In SPX, remember, we saw that net call buying. We saw that net call buying today, and we're seeing a huge call buying in Ethereum, and even the deltas are matching up, you know, on the Ethereum of what's popular in the December contract as well as what we see in SPX as well. So we're seeing those deltas matching up. We're seeing the volumes matching up. We're seeing the same type of buying happening. The institutions are getting long. They're getting long on Ethereum and they're getting long on SPX, okay? So everything that we're talking about is actually coming into fruition, okay? We're actually anticipating, we're anticipating all these quite correctly, actually, based on the data. That's pretty alarming. That's pretty amazing, actually. That's exciting. This is really exciting stuff. Okay. Of course, to really confirm all this, I'll want to, we'll definitely want to observe this for the next couple of months. But yeah, if it plays out exactly like SPX does for the next 6 months until December, I mean, we can pretty much say the main big institutions, they're getting involved in Ethereum as well. Okay. That's what's happening. All right. So that's Ethereum, but that's really exciting that Ethereum is mirroring the SPX more than Bitcoin is. Maybe Bitcoin, maybe it changed. Maybe it changed. Let's take a look at Bitcoin. I want to take a look at Bitcoin today as well. Bitcoin. Okay, let's take a look and see what's going on. December, look at that. Oh, look at that, look at that. So it's all shifting to December. It's all shifting to December now. Look at all that volume. Is this Bitcoin? Yeah, it is. This is Bitcoin. It's going into December. It's shifting into December now. Everything's shifting to December. Smile. Okay. Oh, whoops.
Wait, which one is this?
This is Bitcoin. We're on Bitcoin right now. We did Ethereum before. This is Bitcoin now. So what are we looking at? 45,000 strikes? 45,000, 50,000, 40,000. 40, 45, 50. 40, 45, 50. 40, 45, 50. 40, 45, 50. 40, 45, 50. Delta 1914. That 1918 is coming back up again. Look at that. Look at that shit right there. Look at that shit. Look at that shit, dude. Look at that shit. Okay, it is all coming together. Everything is coming together. Everything. Okay, so it's here to stay. Okay, so yes, institutions, they are getting involved. Look at that. It's at Delta 18. Everybody's thinking, okay, risk taking is happening. People are going out the money. They're looking at Delta 20s, like 15 to 20 zone, and they're speculating on that. Okay, all risk assets. I guess SPX, Bitcoin, it's all doing. So for December, Delta 15 to 20. That is, you know what would be crazy is if S&P 500 closes at 4,500, Bitcoin closes at 40,000, 40 to 45,000, and Ethereum closes at between 3,000 and 3,500 at the end of year. Wouldn't that be crazy? Wouldn't that be fucking crazy? I think that'd be crazy. That would be crazy. Mark this post. Mark this video. Okay, this is the video that we're gonna watch back 6 months from now. We're gonna watch this part again. We're gonna watch this. Okay. Wouldn't that be a crazy prediction if it held true? Wouldn't that be crazy? Wow. Okay. This is amazing stuff. Wow. I'm getting goosebumps just like thinking of this stuff. This is crazy. It all matches up. What a coincidence that will be. What kind of coincidence is that? You know? What kind of coincidence is that? Wow. Okay. I'm shocked. That's what an amazing thing to study. This is an amazing thing to monitor and study. I swear, trading is like, it's a lifetime of learning, man. It really is. It's a lifetime of learning. It's so much to learn. There's always something to discover. It's amazing. It really is. It's a force of nature. Wow, this is amazing. Okay. All right. Well, before I start getting even more excited and before I start breaking things and getting too excited over myself, let's see if you guys have any questions. Okay. I don't see any questions. Do you guys have any questions? Any comments? Anything you guys want to look at? Damn, my hands are shaking from excitement over this. This is exciting, dude. This is really exciting stuff. We're
Did
watching
you do
history.
or at like dollar and stuff earlier?
Yeah, I did the dollar and stuff earlier. Oh, you know what? Let's
All right,
go
I'll
through it
watch
again.
back later.
No. Let's go through it again. Screw it. Let's go through our plan. Let's go through our trades one more time. Okay, let's go through it. UVXY. I accidentally kept an order open. So I actually bought more of these 1424 call debit spreads. It was a very small order. It was like what I call a stink bid. It's called I just put a really low bid and see if it fills. So I had like a very small edition. It's nothing major, but I did add to 1424. I forgot to cancel that order. It did trigger. So I'm still long in my UVXY. I still think there's going to be one big vol episode before the end of the year. We'll see if we get there or not. 1424, I'm still long the 14, short the 24, long the 15, short the 20. I also got that 15-20 call spreads that we opened up about a month or so ago. Those are still at break even, by the way. And again, it's because we took advantage of that skew. Okay, we're putting the math in our favor here, guys. Okay, that's what checkmate trading is all about. Okay, so that's UVXY. What else are we looking at? We're also looking at DIA, the weakest of the indexes. Again, that IVW over IVE gave us the signal that this is going to be the weakest index. It is, in fact, the weakest index. It is still going against us, but not as bad as if we had done puts on the tech sector or S&P 500 as a whole. I am still long the debit put spreads from in October, long the 300, short the 290. Okay, I'm still in those. EEM, I'm still in my EEM puts for March 2023. It is the 39 puts. I'm still long also the FXI puts as well too. FXI, we still have those small, very small September calls that we rolled our August into for a little bit of extra credit. And also, my main though in the Chinese put, but my puts on the Chinese indices though is on the 31.26 put debit verticals, long the 31, short the 26. Okay, so that's FXI. Oh, and then Eurozone. Who can forget about the Eurozone? Okay, so the Eurozone, I still have my November put spreads, the 32.27. Okay, long the 32, short the 27. And so that I still have those positions as well. As far as risk management is concerned, I am out of all risk off sentiment options plays. So that's all the put spreads on the indices plus the call spread on UVXY. I'm out if we close under this 18-day moving average in the dollar. Okay, if we close under this 18-day moving average in the dollar, I'm out. All right, AUD, USD, if this closes over 6903, I am out of FXI and EEM. Okay, so that's my risk management. As far as future trades, SPY, if we get to 415 or so, I'm going to buy 3 to 6 month call spreads. I'm sorry, 3 to 6 month put spreads. I'm going to buy put spreads if we get up here, if we just make a straight line up to there. If not, what I'm going to do is I'm going to start scaling in on shares at the lows that were made about a month ago. I'm going to start scaling in there, but most of it I'm going to start scaling in at 342. All right, and then under 340, I buy 12-month in the money call options on SPY. All right, oil, I'm still looking for that rally. I'm looking for that rally at this point right here at the 2 standard deviation Bollinger Band 112. I'm going to start scaling into some put spreads just to alleviate my FOMO. But the real put spread buying, I'm going to wait till 118, 120. Okay? Future plans also, TSM, I'm going to buy put spreads that are 3 to 6 months out. Actually, I'm looking at the October spreads, 85.75. I'm looking for $2.50 or less, $2.50 or less to get that 3-to-1 reward to risk ratio. I think we get there by the by the 2 standard deviation Bollinger Band right here at 89 or so. Okay, so I'm waiting on that. All right, and that's when I will buy those put spreads. Again, October, I'm looking at the 85.75. Right now is just a little bit over that 250. I'm looking for that 250 to get that 3-to-1 reward to risk, TSM. Okay, what else? GLD, gold. Okay, this is a play that's going to take about a couple weeks most likely. Okay, so don't be getting too ambitious and don't be impatient on this. Gold usually, when it makes a low, it usually revisits it 3 to 6 weeks later, okay? So if it gets to that 1680 again, I'm gonna buy that GLD call spreads, or maybe even call spreads on the gold futures, on the gold futures itself. But what I'm looking for is something about 6 months away. By that point, maybe it might be the January, maybe it might be the February or March expiration, but I'm looking for those like $20 wide GLD call spreads to really maximize the call spread skew on the gold market. Okay, so that is my trade plan, risk management. Indicators, guys. Again, we already talked about the dollar. Well, no, we already talked about the dollar. We already talked about the euro. Well, let's look at the euro chart one more time. Yes, so as long as this is going down, it's going to be risk off. And again, our junk bonds AD line is giving us a little bit of a mixed signal, so we will monitor that going forward. Okay, so there it is. Indicators, current positions, risk management, future trades. Boom, checkmate trading. And that's all she wrote. Any questions, comments, rude remarks? This is your time. Okay, then. In that case, I will conclude this session. I will be back. I'm going to be back about 15 to 30 minutes before market closes. We'll take a look at end of day data. We'll take a look at everything. We'll take a look at a few trades. We'll take a look at see if there's any opportunities for us to add to our positions, or maybe we need to do a little bit of risk management. Whatever it is, I'll be back for the last 15, 30 minutes. I'll send out a notification out on Discord. This video, I'll put it on our wiretap tapes. And again, as always, I'll keep our Twitch stream running so you can see the charts and data that I'm looking at throughout the day. If you're joining us from Twitch and YouTube, join our Discord. There's a link on our About section. We have a lot of conversations like this, lots of insightful things that we're talking about on a daily basis. Come join the conversation. It's been a wonderful day, guys. Wonderful session. We'll talk more again.